invest in mutual fund without losing a single rupee? Are you an investor who is looking to kick off with mutual fund investment but worried about losing your money? Then this video will help to accommodate mutual fund investment in your portfolio without the risk of losing your capital. I agree, mutual fund investment would be a whole new ball of wax for a newbie investor. This video will help you in maneuvering the risk associated with the mutual fund investment. Welcome to holisticinvestment.in. Some investors have the tendency to avoid risk or have a low risk tolerance. Risk-averse investors prioritize the safety of principal over the possibility of higher return on their investment. Are you a risk-averse investor or have a low risk appetite? Then capital preservation and steady income generation are the common objectives for you, which leaves some high risk investment out of picture. If you are a risk-averse investor, then you are missing out an opportunity to get additional returns in an alternate investment. How to balance out the opportunity cost and capital preservation? Let's look. Due to market volatility, one may avoid equity instruments and prefer government bonds or bank fixed deposit. Let us take a practical scenario where a risk-averse investor would invest his surplus in a fixed deposit. As per the Deposit Insurance Credit Guarantee Corporation, that is DICGC guidelines, each depositor in a bank is insured up to a maximum of Rs 5 lakh. If you want to invest more than Rs 5 lakhs, you can spread across banks or spread among your family members. Since fixed deposits provide capital protection, half the battle is won. Now let us move on to the next step. Choose non-cumulative option in the bank FD so that each month you get a cash flow that can be routed to mutual fund systematic investment plan SIP. In other words, the source for your SIP investment is your fixed deposit month. The following calculations will give you a better picture. Scenario 1. If a person invests Rs 10 lakhs in a bank offering 7.6% per annum interest for a 5-year time period, the fixed deposit will fetch a monthly interest that would be around Rs 6,333. This amount can be invested in a mutual fund SIP. Let us assume that this amount is invested in an equity large cap fund where the average 5-year return would be around 12%. If this continues for the next 5 years, then the final fund value would be Rs 5,19,664. At the end of 5 years, the amount invested in bank along with the mutual fund investment would amounts to Rs 15,19,664. Scenario 2 and 3 are the continuation of scenario 1. That is, the first 5 year is same under all scenarios. Now scenario 2. In this case, let us assume you consume the capital of Rs 10 lakh at the end of 5 years. So probably there won't be any SIP after the end of 5 years. But the existing fund value through the first 5-year SIP grows at the same rate of 12% in the next 5 years as well. Then the fund value at the end of 10 years would be Rs 9,15,826. Under scenario 3, if you continue to do the SIP in the next 5 year as well, that is a total of 10-year SIP, then at the end of 10 years, the fund value would be around 14,63,736. At the end of 10 years, your corpus value along with the capital is Rs 24,63,736. When you invest using this strategy, longer time horizon will yield better returns and also reduces the risk. Conclusion. Novice investors incline towards traditional saving instruments, but a balanced portfolio is required to achieve your goals. Diversifying your investment across equity and debt instruments yield better returns than pure fixed income securities. Though equity instruments have the potential to yield reasonable returns, not all the investors have the time to analyze and pick stocks. Mutual funds fill this gap. It offers a better risk-adjusted return in the long run. Also, it provides an inflation-beating return, which is missing in fixed income instruments. Select an appropriate fund based on your goals and time horizon and start off your investment journey. This progressive approach will give you better insights on the practicalities of mutual fund and transforms you as a savvy investor down the lane. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.